September is the worst month of the year, at least historically speaking, in terms of stock market seasonality. So, if we look at this table here, we're looking at the averages or the statistics across the months for the S&P 500. And as I noted there, historically, on average, September has been the worst month of the year for the S&P 500. Returns were minus 0.5% month on month on average, and positive only 47% of the time. So there are a few things to comment on around this. First of all, 47% is pretty close to 50-50. I mean, it does stand in contrast to some of the other months, which were in the 60 to 70% range historically. Second, September did not have the worst drawdown. That dubious honour goes to October there. And it didn't have the smallest upside either, because there is other months with a smaller figure for their best month on record, and the very best one ever goes to October. But it also doesn't have the greatest dispersion of results either. So, it's a generally mediocre month really in the scheme of things. But one thing I will note, when I've looked across seasonality, at different asset classes and markets, also looking at the seasonality of asset class relative performance, so, stocks versus bonds, for instance, it is this August to October period of the year or range of the year where generally it is the worst for risk assets. So typically around this time of the year, you see defensive assets outperforming, so gold, bonds, defensive equities. Well, risk assets tend to lose ground this time of the year, so the VIX tends to be higher, credit spreads tend to be higher, and equities tend to drift downwards. So seasonality is quite an interesting thing because it definitely is a thing, even though it is just looking at historical results and describing what happened. But it's often influenced by the physical seasons, actual fundamental patterns and real-life patterns of activity. But at the same time, I always say it shouldn't be the first thing that you look at. You want to put together the core thesis first. You want to have your, build up a strong idea based on, key supports such as valuations, technicals, monetary, etc. And then you want to look at secondary or third tier factors like this to sort of round out the case and build conviction. Of course, in this instance, I would say that negative seasonality does actually gel with the generally weak backdrop. So I wouldn't actually, in this instance, be inclined to go against it in the current backdrop, and would at the margin be tending to travel a little bit more cautiously. So this chart was the bonus chart from the weekly S&P 500 ChartStorm write-up. You can subscribe to that. We've got the link in the description, but it's chartstorm.substack.com. Otherwise, you can follow me on Twitter to see the raw form of ChartStorm.